Good morning, UPB It is May 21st. It is a Wednesday. I'm bringing up TLT here. I brought it up. I posted some charts on StockTwits and Twitter recently talking about how we're getting really at a very important juncture here for TLT. A break above this line would imply significant move to the upside and possibly new record levels for TLT, which would imply lower interest rates. And then ultimately, as interest rates, as money starts to keep piling into bonds, this would affect the stock market at some point in time. We've magically seen bonds and stocks get bought at the same time, it's a magic. But I think now that we're starting to see a pullback off this long-term trend line resistance, as we did recently this week, I think we're going to continue to the downside. Ultimately, we might get down to 105, and then we can reevaluate there. But right now, I'm trading for a short-term pullback. We're getting that with some big volume in the 30-year bond futures, selling, dumping bonds, and that's going to be good for stocks. I brought this up as well over the last couple weeks. QQQ, everyone's looking at that head and shoulders pattern, the topping pattern, which is still kind of in play. But look, any kind of topping pattern over the last 5 years hasn't really worked out too well for you. And so what I was looking at, and I brought this up numerous times over the last couple weeks, this broadening descending wedge. It's the opposite of a megaphone topping pattern. It's a bullish formation. So we've recently broken out of it last couple weeks, and I'm looking for a move up to new multi-year highs for the NASDAQ and record levels for the stock market. And that's the opposite of pretty much what everybody else thinks. Everyone else calling these, we're seeing stocks move to the upside, but not being confirmed with new all-time highs or record highs with other stocks. And small caps, there's a lot of excuses here to be selling stocks, which is good. It's good news. That's how this wall of worry has been climbed since 2009. It's been going on for 5+ years, and so everybody's so keen on calling a top when they should just be happy going long until we finally do start to see the cracks and the market collapse. Let's look at DDD. I brought this up at StockTwits. Also, I brought this up in the chat room. The fact every Tuesday for the last 3 weeks, DDD has seen a sharp rally, and you can see previous Tuesday up to over 51, up 5%. This past Tuesday, yesterday, was up over 3%. The one before that, I think we're up like 8 or 9%. So DDD came true again. History repeated itself, and we're at a really interesting point for DDD as well, as we're off support here. We've held on, and we're consolidating here in tighter ranges. So we're getting ready for a big move, either up or down to the $30 level. I'm thinking it's to the upside. I think we're going to see over $60 in the short term, but I would not 100% rule out downside. So it is a risky trade either direction here with DDD, but I think highly profitable one if you get the direction right. FEYE, been talking about this one for a while as well. Earnings report came out. We had a big candle down. Now we're starting to recover. We have the stock up 4% here pre-market. I think it's going to make a move up to the gap down from earnings and then ultimately upward to the $50 level. Let me just bring up some of the financials, because I brought this up in my chart post this weekend at the blog at optionmillionaires.com, talking about financials. They've been kind of ignored here, but they're a really nice support level that they've held and look to move higher off of it. If you look, this trend line goes back, and let's pull back a 2-year chart. I'll make it. There we go. And you can see how beautifully FAS is held above this trend line. Again, held above it in April, and now here in May. Look what happened in April. We had a nice $7 move to the upside. And I think we're going to head back up. You can look at XLF as well. XLF, same kind of trend line, respecting it and looking for upside. So you can look at stocks like Goldman Sachs, which is at support here. Good point about great part about Goldman Sachs and its options right now is the market's not really pricing in a big move, because the movement over the last month has been relatively small, $3 to $5. So if we get that spike up to 170, 165 even, you're going to make a lot of money, especially as options for this week come to a conclusion. It's already Wednesday. We only have a couple days left. So if we do get a spike in financials, as interest rates slowly start to creep up, JP Chase, a lot of gaps to fill here. The 57.50, the 56, we get back in this channel, and I could see us moving up to 58 and $60 for JP Chase, kind of shrugging off the dust to settle off that awful earnings report from last quarter. So let's look at Amazon real quick. I also like this one for upside. I'm in the calls. It broke over $300. Looked really strong yesterday in spite of the nasty sell. It was a sell-off yesterday. I wouldn't say nasty. It seemed very calm and relaxed. It took a while for the VIX to even go into the positive territory. I think it closed up 4%. Anyway, I'm looking at this. We bottomed here at support. I'm looking for a move back up to 325 here on Amazon. We have earnings reports Before the bell tomorrow, well, after the bell today, we have NTAP, which is broken above long-term resistance, kind of just petered out the rally after hitting 45. It's down to $34. I'm actually looking possibly to get into some call contracts on NTAP. Heading into earnings today after the bell. Tomorrow, before the bell, we have Best Buy. This is going to be a big earnings report, but you can look, this long-term trend line is acting as resistance. It broke to the downside almost 6% lower. I don't know. This is something I'd watch from the sidelines, but I think if I had to trade it, I think it's going to head lower post-earnings. Same with, actually, Bon-Ton Stores, I think could head to the upside. Its respected support, long-term support at about 930. We have Dollar Tree, which is put in a nice head and shoulders pattern. So I said, yeah, let me get in for the earnings report. Yeah, the last earnings report was a huge spike to the upside, and that's the highest prices the stock has seen since. It's faded down at the 51 level. Now it's back in this channel, and I'm looking for a move down to 49. And it may be down to 38. We'll see what happens here post-earnings. So, of course, I was in the put options, and look what happened. It went to the other direction. Now, probably the earnings report, I should have bought put options, which I'm not going to because the old once bitten, twice shy. We're going to probably see a nice move down to 49 and possibly below that. That's Dollar Tree before the bell tomorrow morning. We also have Movado. Movado is broken below trend line support, so this kind of looks bearish. And then after the bell tomorrow, we have Aeropostale, which is what, a $5 stock now. It's not even. It's a penny stock. I don't even know why I'm covering it, other than the fact once it broke through long-term trend line support, it was done, just like JCPenney. GameStop reports earnings. You can see its last earnings report fell and then rallied a nasty short squeeze to cover this gap, and it's just since pulled back. I don't like this stock long-term, and I think this could be the earnings report that sends it to 30. Of course, there's a lot of shorts in the stock, and they could orchestrate some sort of short squeeze if the numbers aren't so awful. We have Hewlett-Packard, which looks terribly bullish in spite of its drop in November 2012 to $11, pretty much priced in for bankruptcy. And now, gosh, it's going 3D printing. The stock is seemingly on autopilot. So maybe this is the report that sends it back to reality, which is a nice spike to the downside. But I'm not going to trade it. The options are really cheap. You can probably get a 7% move for really cheap on the put side. So it'll be interesting to see where it heads post-earnings. I really don't have 100% direction in mind, so I'm not going to trade it. Same with Marvell. I think it could head to the upside. It's been in a 2-year move off its lows in December 2012. It's been just slowly melting higher. Maybe this is the report that sends it higher. I was down 2.24%, so I might get into some calls for Marvell, leaning towards the bull side. I put a chart up at the blog at optionmillionaires.com talking about how I thought it was going to head higher over the next 6 to 12 months, and I might buy some call contracts in it, but we'll see. This earnings report is going to be very important. Roth stores, this chart is pretty bearish as well. Tried to break above long-term trend line. Former support, now resistance, just looks pretty bearish. Earnings after the bell tomorrow, and then on Friday, before the bell, we have Foot Locker, which has been on a tear. Look at this chart for Foot Locker. A lot of people buying shoes these days. So we're getting up to the top of that trend line there. We'll see if maybe earnings report gets us up there, and then we're going to fade. Anyway, it's UPB here, optionmillionaires.com. Yeah, so I'm bullish on stocks. I remain bullish, especially as we get more negative sentiment out there as the S&P 500 ETF. The spiders, and you can see we briefly broke through this channel. We're back in the channel, this consolidation. Once we break above it, hold above this line, then we'll spike up and we'll make another channel, which is what we've been doing, especially over the last 9 months. We're in one channel, break up, we're in another channel. So we did try and break a couple times over to, we did hit record highs, and we're just consolidating here. Nice candle. We'll see a candle up, and the question is, can we break out over to get over that 190 level? All right, everyone, have a great trading day. It is Wednesday, May 21st, about 15 minutes before the open. I'll see you in the chat room at optionmillionaires.com. Everyone, have a great trading day. Goodbye.